Hey guys, this is Victor. Hope you guys are doing good, doing great today. So I was recently having a conversation with someone about leaving money on the table, right? So we always hear, what's leaving money on the table? Well, I mean, you can see it in different ways, right? You can leave it as if you were selling a service or a product, or you're not getting the enough money for the value that you're providing, right? You're not having the right amount of money for the services or product or the value that you're providing, right? So if you don't get money or the enough money, you're leaving money on the table, right? You're not maximizing the opportunity. But when it becomes about taxes, you can also leave money on the table. And that means that you're overpaying taxes, right? Like you probably are not having the right tax planning strategy, right? You're not having the right planning around taxes, and therefore you are overpaying taxes. Therefore, again, you're leaving money on the table. So the IRS actually, guys, is not too much of a bad guy if you really think about it. The IRS allows you to have up to 3 years look back in your taxes and find ways where you actually overpay taxes, right? So if you are in the year 2022 here that we are, well, you can look into the last 3 years of taxes and see, what are some of the areas in which you actually missed that made you to overpay taxes. So you have 3 years, guys, to do that. So the best way for you to do that, you might think, well, Victor, how do I do that? How do I accomplish that? It's very easy, guys. You want to talk to a professional. You want to talk to a CPA, right? But let's say you want to do this yourself, right? So the best way you can do this, I would start, is by having a copy of your tax returns. I would start there. And I would look at the revenue line. And then you would see, okay, is this the actual amount of money that that your business brought in that year? So I would start there, the revenue line. Was I on the accrual method of accounting, or was I on the cash method of accounting? Did I maximize the right method of accounting, right? That's one way. The second way, guys, is by looking at your taxes, you will take a look at all the expenses that you reported, all the write-offs, all the deductions that you reported, either on your Schedule C, on your S Corp, and your partnership, and your C Corp. It doesn't matter. It's the same rule. 3 years look back, right? So, and you're like, did I actually spend this money, this amount of money on these expenses? Did I really do that? Did I spend this little? I thought I spent more money here. Okay, so I would start there, right? And so you want to take a look at your accounting records, right? You take a look at your P&L, you take a look at your QuickBooks, you take a look at your bank statements, and then you go on a line-by-line basis, right? And you say, man, I think I'd spend more money here on advertising. I think I'd spend more money on payroll. I think I'd spend more money on rent. You know what? I did not consider my credit card expenses in my P&L. Guys, you know how many times our clients that became new clients actually missed expenses that they reported in their personal credit cards or in the business credit cards, and they would not include those in the taxes? That automatically will increase the expenses on your taxes, therefore would increase the probability that you will have a refund on an amended return, right? So let's recap there. So you want to take a look at your income, right? Are you having actually the right method of accounting? Are you reporting all the expenses that you needed to have in your business, right? Did you report the expenses accordingly, properly? Did you do it, correctly? Okay, so remember the 3-year rule. And by looking at the income and by looking at the expenses, you can actually take advantage of the 3-year rule and never leave money on the table. See you guys soon.